Mastering Stock Market Risk Management. Top Strategies. Welcome to our guide on stock market risk management. Listen up, because this is about protecting your hard-earned money. We're not talking about gambling here, folks. We're talking about investing for the long haul. And in this crazy market, you need a plan to navigate the inevitable bumps in the road. Today, we'll explore key strategies to help you mitigate potential financial losses and protect your investments. Because remember, bulls make money, bears make money, but pigs get slaughtered. You see, too many people jump into the stock market without a clue about risk management. They chase the hottest tips, buy high, sell low, and then wonder what went wrong. Don't be that investor. We're going to arm you with the tools and knowledge you need to make smart, informed decisions. We'll cover everything from diversification to emotional control, because let me tell you, keeping a cool head in this market is half the battle. So buckle up, get ready to take notes, and let's dive into the world of smart strategic investing. Diversification. Don't put all your eggs in one basket. Listen, you ever hear the saying, don't put all your eggs in one basket? Well, that's diversification in a nutshell. You don't want your entire portfolio riding on one stock, no matter how promising it seems. Think of it like this. You wouldn't bet your entire life savings on a single horse race, would you? Of course not. You'd spread your bets, hedge your risks. That's what we're doing with diversification. We're talking about spreading your investments across different sectors, industries, and geographic regions. Tech stocks looking shaky? No problem. You've got healthcare, energy, and international stocks to cushion the blow. Remember, a diversified portfolio is like a well-balanced breakfast. It gives you the energy you need to weather any storm. Don't underestimate the power of this simple yet crucial strategy. Asset allocation, finding the right mix for you. Now, asset allocation goes hand in hand with diversification. It's about finding the right mix of investments to match your risk tolerance, your goals, and your time horizon. Are you a young investor with a long runway? You can afford to take on more risk, maybe allocate more to growth stocks. Closer to retirement, you might want to shift towards a more conservative approach with a larger portion in bonds or real estate. Think of it like a recipe. We're looking for the perfect blend of ingredients. Too much of one thing can throw off the whole dish. We want a balanced portfolio that can weather market fluctuations and deliver those sweet, sweet returns. Stop-loss orders, your safety net against big losses. Stop-loss orders are like your insurance policy in the stock market. They're automatic sell orders that kick in when a stock drops to a certain price, limiting your potential losses. Look, we all hate to see our stocks go down, but sometimes you gotta cut your losses and live to fight another day. Stop-loss orders take the emotion out of it. You set the price, and boom, the order is executed automatically. Now, some people might say stop-loss orders limit your upside potential. But you know what? I'd rather leave some money on the table than watch my entire investment go up in smoke. Chapter 4. Position Sizing. Don't bet the farm on one trade. Position sizing is all about managing your risk on each individual trade. You never want to put too much of your capital into any single stock or investment. Even if you're convinced you've found the next Amazon, you don't go all in. Remember, anything can happen in the market. Unexpected news, sector rotation, even a tweet from a certain someone can send your stock tumbling. So, how much should you allocate to each trade? Well, that depends on your risk tolerance and your overall portfolio size. But as a general rule, never put more than a small percentage of your capital at risk on any single trade. Chapter 5. Hedging, playing defense in the market game. Hedging is like buying insurance for your portfolio. It's about using financial instruments like options or futures contracts to offset potential losses in your other investments. Think of it like this. You buy car insurance to protect yourself from the financial risk of an accident. You might not need it, but boy are you glad you have it when that fender bender happens. Now, hedging can get a little complex, but the basic idea is to find an investment that moves in the opposite direction of your main holdings. So if your stocks take a hit, your hedge can help soften the blow. Chapter 6. Regular portfolio rebalancing, keeping your strategy on track. Remember that asset allocation we talked about earlier? Well, over time, your portfolio can drift away from your original target. That's where rebalancing comes in. Think of it like getting your car aligned. You don't wait until your tires are bald. You do it regularly to make sure everything's running smoothly. Rebalancing involves selling some of your winners and buying more of your losers to bring your portfolio back into alignment. It might feel counterintuitive to sell some of your high-flying stocks, but trust me, it's crucial for maintaining your desired risk level and maximizing your long-term returns. Chapter 7. Risk Tolerance Assessment. Knowing yourself is half the battle. Before you even think about investing, you need to understand your own risk tolerance. How much volatility can you stomach? How comfortable are you with the idea of losing money in the short term to potentially achieve higher returns in the long run? This is deeply personal, folks. There's no right or wrong answer. But you gotta be honest with yourself. Don't try to be a hero and take on more risk than you can handle. Chapter 8. Monitoring and Adjustments. Staying ahead of the curve. The stock market is a dynamic beast, constantly changing and evolving. What worked yesterday might not work tomorrow. That's why it's crucial to stay informed and be prepared to make adjustments to your investment strategy as needed. Keep an eye on market conditions, economic indicators, and any news or events that could impact your investments. Don't be afraid to make changes if your original thesis no longer holds true. Chapter 9. Limit leverage. Don't get burned playing with fire. Leverage, or borrowed money, can amplify your returns. But here's the catch. It also magnifies your losses. And believe me, those losses can pile up fast. Now, I'm not saying leverage is always bad, but it's a tool that should be used sparingly and with extreme caution. Before you even think about using leverage, make sure you understand the risks involved and have a solid plan in place. Chapter 10. Emotional control. Don't let fear and greed drive your decisions. Fear and greed. These are the two emotions that can wreck your portfolio faster than you can say, margin call. When the market is crashing, it's easy to panic and sell everything. And when stocks are soaring, it's tempting to throw caution to the wind and chase those gains. But here's the thing. Successful investing is about making rational, informed decisions, not emotional ones. Chapter 11. Research and Due Diligence. Knowledge is power. Listen, we're not just throwing darts at a board here. We're making calculated decisions based on solid research and due diligence. Before you invest in any stock, take the time to understand the company, its industry, its competitive landscape, and its financials. Read analyst reports, listen to earnings calls, and follow industry news. The more you know, the better equipped you'll be to make informed investment decisions. Outro. Risk management. Your key to investing success. So there you have it, folks. We've covered the essential strategies for mastering stock market risk management. Remember, investing isn't about getting rich quick. It's about protecting your hard-earned money and growing it steadily over time. By implementing these strategies, you can mitigate stock market risks, protect your capital, and optimize your portfolio performance over time. You'll be able to sleep soundly at night, knowing that you're well prepared for whatever the market throws your way. Thanks for watching, and happy investing!